Welcome to This Explainer. Financial freedom is a universal dream. But for a lot of us, the stock market, it just feels like a locked door. Well, today, we're handing you the key. We're going to completely remove the fear around investing so absolutely anyone can start building true wealth. Let's get into it.
Be honest. Is that how you feel? When you turn on the financial news, it's intense, right? You see those blinking red and green numbers, people in expensive suits shouting across trading floors, and experts throwing around intimidating jargon like market capitalization and portfolio diversification. It is entirely normal to feel like the whole thing is just a fast-paced casino designed for wealthy insiders. But here's the thing, that stereotype is completely wrong. To prove it, here's our roadmap for This Explainer. First, we'll demystify the stock market. Then we'll look at how shares and prices actually work. From there, we'll cover buying and selling shares, managing risks and rewards, building your investment portfolio, and finally, long-term wealth creation.
Okay, let's dive right into Section 1, Demystifying the Stock Market. We really need to dismantle this Wall Street illusion right now. There's a stark contrast between the myth and the reality here. The stock market is definitely not a gambling hall where you just place bets on random blinking numbers. Factually, it's just a simple marketplace. Think of a traditional, everyday market where people buy and sell goods. The stock market operates exactly the same way, except the goods being traded are pieces of ownership in real, functioning businesses. So when you buy a stock, you aren't gambling. You're literally becoming a business owner.
So how does a business actually raise money to grow? Let's make this super relatable. Imagine your friend owns a local bakery. They bake the absolute best bread in town, the business is booming, and they're ready to open a second branch. But, well, they just don't have enough cash to do it on their own, and they really don't want to take out a massive bank loan. So what's the alternative?
Simple. They sell a piece of the business to you. Your friend needs capital to expand the bakery, right? So you decide to hand them 100,000 EUR in exchange for a small ownership stake. Your friend takes that money, builds the new branch, and as the bakery expands, sells way more bread and makes more profit, the overall value of the business goes up. And because you own a piece of that business, the value of your ownership increases right along with it. This is exactly how the primary stock market works. It's just on a much larger scale.
Which brings us to Section 2, how shares and prices work. So what happens when that bakery becomes a massive public company sliced into millions of pieces? Well, when a company goes public, its total ownership is divided into shares. To figure out what the entire bakery is worth, we use a term called market capitalization, or market cap for short. It's just basic math, really. You take the current price of one single share and multiply it by the total number of shares in existence. That's it. This simple calculation completely demystifies how investors compare the sheer size of different companies, whether it's a small local firm or a massive global tech giant.
But wait, why does that share price bounce around every single day? Honestly, it's just the basic law of supply and demand. If a company announces record profits, suddenly 10 people want to buy the stock, but only 3 people want to sell it. Competition among buyers heats up, and boom, the price rises. Conversely, if some bad news hits and more people want to sell than buy, well, the sellers have to lower their asking price to find a buyer, and the stock falls. It's not magic at all. It's just human behavior reacting to company earnings, the economy, and the daily news. All right, let's get practical with Section 3, buying and selling shares.
Buying your very first share is actually an incredibly empowering process, and it literally only takes a few steps. First up, define your goal. Are you investing for retirement or maybe a down payment on a house? Next, you need a broker. A broker is just your digital gateway, usually just a super easy-to-use app on your phone that connects you directly to the stock exchange. Once your account is funded, step 3 is absolutely crucial. Do your research. Don't just buy on rumors. Look for profitable companies you actually understand. Finally, you place your order. A market order buys the share immediately at whatever the current price is, while a limit order lets you set the exact maximum price you are willing to pay. Easy, right?
Moving right along to Section 4, Managing Risks and Rewards. Now, anytime we talk about putting your hard-earned money to work, we have to talk about defense. We have to talk about risk. And yes, investing definitely comes with the risk of temporary market declines or maybe a specific company struggling. But listen to this. Leaving your money idle in a zero-interest bank account comes with a guaranteed risk, and that risk is inflation. Inflation is like a silent thief that permanently destroys your purchasing power year after year. Doing nothing is actually incredibly risky. So our goal isn't to fear or avoid risk entirely, but to manage it intelligently so our money can actually grow.
And that leads us perfectly into Section 5, building your investment portfolio.
So how do we actually manage that risk? Well, a balanced, beginner-friendly portfolio acts kind of like a sturdy house. You build it with different materials to make it strong. By diversifying your money across different areas, you protect yourself. And this brilliantly illustrates what that looks like. A really solid approach might be allocating 60% in growth stocks for the long haul, 20% in large, stable companies that pay out reliable dividends, 10% in broad index funds or ETFs that just track the whole market, and 10% held in cash for emergencies or, jumping on new opportunities. If one sector has a rough month, the other materials in your house keep the roof from caving in.
Finally, we've reached Section 6, Long-Term Wealth Creation.
The stock market rewards patience more often than impatience. Wealth is built in silence. I love that quote. Let that sink in for a second. The media really wants you to think investing is this loud, fast, and highly stressful thing. But you know what? The most successful investors aren't frantically checking their phones every 5 minutes and panic selling. No, they're calm, they find great businesses, they buy a piece of them, and then they just quietly wait, sometimes for years.
So the crucial point is understanding the compounding effect. To put that into perspective, let's say you invest 100,000 Naira, and it grows at an average of 10% a year. In year 1, you have 110,000. But in year 2, you aren't just earning 10% on your original money, you're earning 10% on your new profit too. That brings you to 121,000. By year 5, you've crossed 161,000. It's exactly like a snowball rolling down a hill, gathering more and more snow. The longer you let it roll, the bigger it gets. When you get right down to it, the real secrets to wealth are surprisingly simple. Start as early as you possibly can and stay incredibly consistent. Use a strategy called dollar cost averaging, which is really just a fancy way of saying you invest a set amount of money every single month, totally regardless of what the market is doing. When your companies pay you dividends out of their profits, don't just go spend them. Reinvest them to buy even more shares. And above all else, stay patient. When the market inevitably dips, and it will, remember, it's just a normal part of the process, not a reason to panic.
Wow, we have covered a lot of ground today, haven't we? From dismantling that whole casino myth to unlocking the sheer power of compounding. You now have the knowledge to step out of the shadows and confidently into the marketplace. You know that buying a share literally makes you a part owner of a real breathing company. So I want to leave you with one final provocative thought to reflect on. What kind of business owner will you become? Your wealth-building journey starts the very moment you decide to take action. Thank you so much for joining me in this explainer, and hey, happy investing.